What's going on, fellow traders? It's Nathan here with another ArielFx Smart Money Concepts video. Now this video is going to be so important because although last week's video dealt with my favorite component of trading, which is supply and demand flips, this video that you're about to see helped me to make the most money out of all the components that I teach in Smart Money. Obviously, we have to look at the market holistically, so this is just one component of my entire strategy. However, mastering these two components in which you are about to see helped me make so much money over my 5 years of trading experience. Now, it all has to do with scaling in and trade management. Scaling into positions from a higher time frame levels not only confirms trades, but also increases your win rate and has huge risk to reward effects. Trade management is so crucial because if we trade manage properly, we won't have to worry about giving the market back the money that we made. Now, so many people go wrong with trade management. The reason why is that they move stop loss to break even too early, they do it too late, they don't know appropriate take partial levels, and they don't know where to set their overall take profit. Having just those things off will significantly reduce the amount of overall money that you make, even if you have the directional bias correct and the entry correct. We have to do everything we can to extrapolate the most money out of each trade. So I'm going to be teaching you all about scaling in trade management, exactly how I approach it in my personal trading and within the VIP that I have within ArielFx. So guys, I'm all about rewarding good traders here at ArielFx. So what I'm going to be providing for you is the opportunity to showcase your skills here at the end of this video. So at the conclusion of this video, after you've soaked up all the information, I will give you the opportunity to break down a pair of my choosing based upon the concepts that you have learned in this video. What I would like for you guys to do, if you are willing to participate, is to create for me a 5 to 10 minute, maybe even a little bit more long video going over all of the components that you have learned throughout this video here, applying it to the currency pair that I give you at the end of the video. What you will do is break down that chart top down, scaling into positions, putting your higher and lower time frame supply and demand levels in, showing me scaled in trades with the risk to reward, telling me why you're scaling in to what you're looking at and the trades that you're taking, alongside telling me why and how you are trade managing those trades. You will send that video over to me, and if I deem it correct or very similar to what I would do, then you are going to be receiving a big reward. So guys, let's not waste any more time. Let's get right into it, and I hope you enjoy this video.
Hey folks, you ever wonder what broker I use? Well, I use HenkoTrade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining HenkoTrade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at henkotrade.com or just click the link I've put in the description.
So heading over to the USD Swiss franc chart, I'm going to give you a little bit of an update as to the current trade that we talked about on last week's video, all about supply and demand flips. So as you guys know, we were looking for sells from our original supply level. Now the reason why is because we came up into a higher time frame objective region and had a clear reaction from it, as indicated by this blue box. Within this counter trend, we see a high, a low, a high, a low, a high, creating this demand here with that red candle, that sell-off candle. We came down into that demand and had a reaction from it, but failed to generate a higher high in the sequence. Instead, we flipped and made a lower low, so this demand has now flipped to supply, hence the title of last week's video as we went over supply and demand flips. So at first we created or engineered equal highs. Now this is a very good thing because when we start to push away from it, I like to see that run on liquidity, equal highs, taking buy side liquidity, freeing up the liquidity to mitigate that supply level and go short. So that's what we were looking for last week. And as of right now, it has not quite played out yet. So I'm going to take a little bit more time and recap this again on next week's video. But we did take a nice buy opportunity from this demand here at 9,923.50. I didn't call this out on last week's video because I didn't see it in time. I saw this over the weekend after the video has already been published. However, we did talk about this on my Smart Money Sundays episode. If you guys watched that at all, I talked about this level here. So looking for buys back up into 1.0042, our original sell. So we are looking to hedge our position. So if I zoom out on this, we can see the clear hedging opportunity. Now, as described before, we are lower time frame bearish, but higher time frame bullish. We reacted from a prior area of demand. On the lower time frame we accumulated, failed to generate a lower low with this sell-off, and made a higher high. So this flips from supply to demand, hence why we bought it from that level, looking for continuations to the upside. If we end up making an overall higher high, great. I will win a 1 to 6.5 risk to reward back up into objective at 1.025 on the higher time frame. However, if we continue with the lower time frame, coming into that 30-minute supply level, filling imbalance on the higher time frame, taking buy side liquidity as we have been forming here, and we sell off, making a lower low back down into our higher time frame objective at 0.97, which is our psychological level and demand / imbalance fill on the higher time frame, creating a higher high, a higher low, a higher high, and a higher low. That would be that higher time frame retracement we would need for a potential long, again, another expansion. So that's always a possibility. And that would be a nice 1 to 3.23. So regardless, the aggregate position would probably be in profit. So when, like I talked about last week, when the higher and lower timeframes are not in conjunction with one another, we oftentimes will hedge our positions because we don't know exactly which direction we'll actually break out to. So in this case, if we end up going long from our demand level, great, we're in profit. We would lose on the sell, so maybe lose 0.5% here, and then win on 0.5% here because I'm taking 0.5% risk there, 0.5% risk here. So in this case, a 1 to 6 on 0.5% would yield 3%, minus 0.5% if we lost the sells here, it would be 2.5% net return. On the other hand, if we win the sells and lose the buys, then we would win 3.23%. So that's about 1.6%, because I'm using half risk, minus 0.5%. That's about 1% return there. And you can even use 1% risk on each of these if you wish as well. However, what's great about this position already is if we end up going long, great, we make money. If we end up going short from this level, because of the fact that when we come up into that level, we would be breaking structure or making a higher high for that matter, I would move stop to break even on this and take partials. So even if we do go short here and we win on the sells, I wouldn't even lose anything on the buys because I would be moving stop to break even and taking partials. So I could only win, right? So this is how we can hedge when lower and higher timeframes are not in alignment with one another. So I'm still looking for this. Another opportunity that you can take advantage of this week, if we get the pullback, would be CAD Swiss franc. Higher time frame, we are definitely in a downtrend. We can just clearly see that through the lower low, lower high structure. If I head out to the daily time frame, we can clearly see that the current trend is bearish. The lower time frame trend is definitely bullish as of now. We can see that we have relatively equal lows, or just this 1, 2, 3, 4 touches of this retail trend line. We already know sell side liquidity is resting below this level. So overall, we're looking for shorts. However, until we reach our higher time frame supply zone at 0.74, which is our psychological level and higher time frame objective, we can just see that this is the start of the distribution where we started to distribute. This is really that last buy to sell. So heading back up into premium price, we'll be looking to take profit at 0.74, providing us with a nice 1 to 2.78, not the best risk to reward in the world. But if you would like to take advantage of it, you can. We can see with the current trend, we're making higher highs and higher lows. What we had last week, on Wednesday of last week, we had a clear sell-off, sell to buy, clearing equal lows, so taking sell side liquidity, coming and filling in this imbalance is just straight buying volume, and coming into this demand level as we pinpointed. We had the reaction, we pulled back, but we failed to make a lower low within this counter trend sequence. So when we failed to generate that lower low and we made a higher high, this will flip from supply to demand. So that's what I'm looking to see. Higher high, looking for a higher low for another higher high. Sell side liquidity, I want to run all these lows, come into that demand, and then go long again into our higher time frame objective of 0.74. Stop loss in this case would go below the overall low. Now, if you wanted to be more conservative or more risky with this, you could place your stop right below this low. However, since this is the low that created this high, we could technically pull back 99% of the way, make a higher high, and still maintain our bullish structure, which is why stops for me will go below this level. But this is demand, so we could potentially, if you wanted to be more risky and have a better risk to reward, place your stop below that level, in which case it would turn from about a 1 to 3 to a 1 to 5.5. All right, so whatever you would like to do, that is my setup for this week. Now getting into this video, guys, this is going to be an awesome video because I'm going to clear up a lot of confusion surrounding how we take trades. I know a lot of you love to scale in. We're going to be talking about scaling into positions, scaling into trades to get huge risk to rewards, to really grow our account, because we're all about making money, right? We want to do it the right way. We want to do it the safe way, but it's all about making money in this industry, taking and extrapolating profit from the market. And how do we do that? Even more than higher time frame level trading is scaling in. But not only that, there is a big problem facing a lot of traders. A lot of you may have the direction right, have the bias correct, right? You may even get a great opportunity in terms of a buy or sell, meaning a great entry price. You may even get a wick entry, but you still find yourself not being able to take money from the market. The reason why is because some of you may not know how to place stop loss correctly, when to move stops to break even, when to leave it above a level or below a level, right? When to not move stops to break even. Also, when to take overall profit and when and where to take your partials. So many times people can get the direction right. They can get the trade right. Heck, they can even get a wick entry. But it comes down to how you manage the trade that's going to make the most difference in the amount of money that you take from the market. So many times you can be up a 1 to 5 or heck, even a 1 to 10, like we'll see in this example that I'm about to go over. But if you don't know where to take partials or you're aiming for the wrong targets, then you could sacrifice all of that profit and give it right back to the market. All right, guys, so I'm going to clear up a lot of things that you guys probably really want to hear in terms of scaling in. I know so many people have been asking me over the past few weeks, how do I scale in correctly? How do I get those risk to rewards that you are getting on a day-to-day basis? How do I see this type of profit? How do I sustain my profit and not give it back to the market? So many questions really over the past month or so. So this is why I'm creating this video today, is to give you sort of an objective standpoint as to how we can scale in properly and how we can trade manage. Now, scaling in, if you guys know me and have been a part of my community for quite some time, you would know that scaling in and trade management are really the only two things, or the primary two things, that are relatively subjective, because it all comes down to the individual trade at hand. However, I'm going to try and attempt to do my best to give you a more objective standpoint in this matter. And then we will look to continue to trade using these principles that I will go over so you can apply it to your day-to-day trading and really pump up those profits, guys. I am so proud of all of you VIP members. You guys are killing it lately. I'm so really glad to see all the profits you are making, and the risk to rewards, guys, amazing. But it just comes down to fine-tuning and tweaking a couple of little things and doing the little things right. If we can do that, you guys are going to see tremendous profits. I guarantee it, 100%. However, I'm always about rewarding good traders. So here's what I'm going to do for you all today. At the end of this video, I'm going to give you a pair, a currency pair that we are going to look at. And I'm going to give you a time frame, meaning not a time frame like the 1 hour, 4 hour, but a time frame in terms of a date range. Like we can see here, we're trading in this current example in September of this year. I'm going to give you a date range in which to look at. And I'm going to show you exactly what I mean in a little bit. What you are going to do is, based upon the principles and the information that you have learned in this video that I'm creating now, I want you to apply those same principles and concepts to the pair and the date range in which I give you. Now, what I want you to do is I want you to break down that chart for me top down and then go about scaling into higher time frame positions. You can place higher and lower time frame trades, but then scale into those positions and then tell me why you're scaling in, for what confluences you have, why it's valid, why it's not valid, and tell me why and how you are going to manage the trade. When are you moving stops to break even? Where are you taking partials? Where is your overall take profit? Marking off your higher and lower time frame supply and demand zones. Telling me where your objective standpoints are. Where is price heading, right? And if you guys can do that, it's obviously not going to be 100%. You're not going to be able to get every little fine-tuned detail down to a core, down to a T. But if you get the majority of everything right, I'm going to provide you guys with a huge reward that I'll go over at the end of this video. So I'm not even going to tell you the pair yet. I'm going to tell you guys at the end of the video. But if you stay tuned and learn this, which is a really interesting and relatively easy concept to understand, but it takes practice, but it can really pump up those profits, guys, in terms of huge risk to rewards and teaching you how to really extrapolate the most money you can from this market. All right, so I'm going to provide you with a really great reward if you guys take advantage of it, and I'm going to tell you more about it towards the end of this video. So let's get right into it. So in terms of scaling in, what's the point of scaling in? The point of scaling in is really for two things. One, for higher risk to reward trades because you're confirming your entries, but two, having more highly probable trades because you've taken higher time frame areas of interest, you've waited for reactions from it, and then you're scaling into a lower time frame to get more precise entries, but more highly probable entries as well to continue with the higher time frame reactions that you're seeing from your overall levels. I will also go over higher and lower time frame structure and how we can trade between the two, because it's oftentimes unrecognized in this industry that, many people don't really know how to take higher and lower time frames in conjunction with one another. They only look at one time frame and they go about trading that time frame with the concepts. Now, you could be a master at smart money concepts, even my concepts that I teach, but if you don't know how to look at multi-time frame structure and do that sort of analysis, it's not going to produce a lot of fruit for you. We have to be able to put everything together. So really, this is just one component of my strategy, one component as to how I look at the markets every single day. But hopefully this will clear up a lot of confusion for you. All right, so first and foremost, in terms of scaling in, finding high risk to reward trades and trade management, what do we first have to do first? And you guys already know this, we have to do our top down. So if we scale out and just look at what price is doing, we're currently in a bullish market, right? We haven't made a higher high from this previous high, but we haven't made a lower low yet, right? So kind of lower time frame in this sort of trend, we're making higher highs and higher lows. However, we're approaching an extremity, right? This is an extremity, right? All of this is intra trend, but this is an extremity. So we are approaching our higher time frame level of supply. Why is this supply? Because this was our last bullish volume that failed to generate a higher high within this pullback, and we ended up forming a lower low from here. So we have a lot of imbalance that we needed to fill, and that was our supply level in which if we were to go short from, we probably need to come back up into. So now we can pull that blue box all the way over, and once we finally start to approach that level, we can look for potential sell positions. Now, everything that we were doing in here, if we were buying, our take profits would have been at that objective. So we're looking to potentially sell off from here. Now, we have to understand two things. For one, even though we came into the overall objective, we are still bullish. We're making higher highs and higher lows. Higher high, higher low, higher high. So even though we have the possibility, since we reacted from the higher time frame objective to make a lower low in the market, even though that's a possibility, it may not occur. We may continue to trade with the current trend, which is why we need to be placing our take profits at valid levels. Now, I'm going to go into trade management after we start getting into these positions, and I'm going to teach you exactly how I would manage each and every one of these trades down to a T. Okay, so let's scale in here. Once we approach our higher time frame objective, what do we look for? We look for slowdown in price. We look for shifts in structure. And we can see here we haven't come into it. Even though we broke this little tiny structure, we haven't come into objective. So we would know not to sell this. We would wait for a pushback up into that objective region, which it did. So we created a higher high, we created a higher low, we've created a higher high. Now we're starting to see a reaction. We're kind of still consolidating. We've kind of formed this descending liquidity here. We have 1 touch, 2, 3 touches of this trend line, and we have a huge fake out sell side. We can see these equal lows. I'll scale into this. We have these equal lows here. We fake out, entice sellers below these equal lows, the breakout traders. We push it right back up, take their stops. Of the breakout traders above this trend line, they take their stops by pushing back down, right? So we're taking liquidity on either side of the market. However, in the higher time frame trend, we failed to generate a higher high in comparison with this high. And we ended up moving over and making a lower low. Not only a lower low compared to our swing point here on a lower time frame, but on the higher time frame as well. We have closed below that level. So now we can consider ourselves bearish. And this is where we have to scale in and look for our risk to reward trades. So initially, I'm gonna get rid of all this. Initially, we're waiting for a higher time frame reaction. Okay, we've got the reaction, and now we can see here that we have made a lower low. So now what would we naturally expect? In a market structure flip, we would see a lower high for a lower low. So where do we want to be looking for our initial position? So really, this was the high that failed to generate a higher high and made the lower low. So this will flip from from demand to supply. Right? We've reacted from levels of demand in here, failed to make a higher high, instead stopped, made that lower low, closing below market structure. So in that case, we want to be looking for pullbacks in and around this unusual looking supply zone, but the concepts are still there. So really you can take it from the bottom of this wick because that's the last buying volume, or just somewhere within this lower time frame supply there. But anyways, look at the price. Look at where price is, 144. That's interesting. That's a psychological level. So let's just go 144.000. Okay, 144, and let's just make it pretty. So 144.000, we're going to be looking to sell from this level. Okay, so I'm going to mark this off, and we're going to follow along with the risk to reward because I'm going to calculate all of this at the end and give you the exact result we should have seen, and we did see based upon the exact trades that we took. So guys, I'm going to be showing you even in here. So I'm going to be showing you within this presentation that I have. Oh, I didn't even upload it yet. You know what, guys? I will upload it very quick. I'm going to pause this video and then replay it again. Okay, so now that I have it marked up and put it into this PowerPoint presentation, you guys can see. So this is the exact trade in which we took within our VIP community. I'm all about transparency. I want to provide you guys with the most, realistic returns that our community has been getting, but providing you with transparency to kind of put my money where my mouth is, right? I don't want to just be going over hindsight examples. That will definitely help you learn, but at the same time, you'll understand that we actually did take this within our mentorship program. We send out this stuff every single solitary day, guys, all these types of analysis. So we can see clearly that we were looking for that supply zone to be reacted from. 144 was that entry, stops are above the previous high, looking to take it all the way down into 138 higher time frame. All right, so the next one I will go over in a little bit, but that is our secondary position. As we can see, we were in profit on both of them. We pulled back into our secondary level, started to fall. And then on the third one, we can see that we came back up again into our third position and then fell all the way down, targeting 138 for all three of them. And we can see that, if you scale in, this was September 20th, 2022 that I posted this to my VIP community. And you can see in the background that it's part of the Discord. September 20th, September 21st, September 22nd that I posted these. All right, so just providing you with that transparency there. So heading back to the charts, what we can do here is we can sell from 144. Now it's all about scaling in to see if there are any additional positions. And sometimes there may not be any additional positions, and we just have to let the current trade ride. Now what I would do for this time is you could either do one of two things. You can place 1% risk here, and then any additional position, place another additional 1%, or you can split it up. You can risk 0.5% here, and then if you find a scaled in confirmation trade, you can put in the rest of your position there, right? So that's the full 1%. So 0.5% here, just in case it just blitzes right through it, hits your stop loss, and in that case, you only lose 0.5%. But if you confirm the trade and get in, then you're at a 0.5% risk again, but at a better risk to reward, and now your full 1% is in. And you've confirmed the trade. So that's what I usually do. I usually go 0.5% risk there, and then other half upon confirmation. So let's scale in. And this is what we don't want to do, guys. If you're on the 1 hour time frame, you don't want to just scale into the 1 minute. That's just dumb. You want to start slowly, 30 minute, 20 minute, 10 minute, all the way down until we can see something that's pretty. And what do we want to see? We want to see reactions from this level and counter trend breaks. That's how we want to scale in. So let's go to the 30 minute, and I'm just going to use bar replay here for the time being. My bar replay down to our overall target at 138. Okay. And we're going to keep going. We don't really see any counter trend. Okay, here we can see our counter trend, right? We've made a high, we've made a low. We have made a high again. So this is our higher time frame swing, and we're just going to mark this off. Higher time frame, like more of like the 15-minute time frame swing points. So we finally come up into our original level, 144, filling imbalance back up into the supply region in which swept this liquidity. Whoops. In which we swept this liquidity, failed to generate a higher high, actually came into a lower time frame supply level there, and then we fell and made a lower low. So a lot of confluence already building up. So now let's scale into this and see what we can find. Now let's look at the counter trend. Now when we look for scaling in opportunities, we want to wait for price to react from it. And I don't just mean on the 1 minute. We can't just immediately go to the 1 minute. That's not how it works. Okay, now what we can do is if we find an opportunity on the 15-minute, maybe we can then scale into the 5-minute and keep going from there. You don't want to just jump from the daily to the 1 minute. It's not how it works. You want to start by going from the higher time frames and slowly scaling into the lower time frames. So as we can see on the higher time frame, 4 hour, 1 hour, we had a position here at 144. Now we can scale into the 30-minute, 15-minute and kind of see this counter trend that's forming. So we have a high, we have a low. We have a high, we have a low, we have a high, we have a low, we have another high here, and then we break and make a lower low. Okay, so we have cleared liquidity and we've made that lower low. We have shifted in structure. So where do we look to pull back into? That would be that confirmation type of trade on the 15-minute. So now, where do we break structure? Right here, right? So where was our last buy to sell supply zone on a lower time frame? Well, you could classify it as one being here, but that was already mitigated with this push. So that could be your supply zone that you take it from, or from the trade that I talked about here, on right there, the first one, it was just at the last 15-minute buy to sell volume. Okay, so that was right in here. We took a trade from this level right there. So cool, we've scaled in, we've waited for counter trend structure to break. Now where do we put stops? So this is very important. Now I'm going to go over how to manage each and every one of these positions after we start getting into them. But how we go about setting appropriate stop losses is understanding the lower and higher time frame. Since we have broken structure on the lower time frame here, we're probably not going to come back above this high. So we can set that take profit to about 50 pips. Let's call it 50 pips. Okay, it's not going to be exactly, down to the pip, but about 50, right? Where do we target? Well, let's just go higher time frame targets first. We'll talk about partials later. Okay, higher time frame, because we've came into an extremity on the higher time frame, we've pulled back, came into our last point of supply, we're most likely going to make a lower low. Now, since we are higher time frame bullish still, even though we came up into this higher time frame level, we still need to be looking to take profit at an appropriate position. If we're bullish, we need to be taking profit upon a higher low because we could potentially make a higher high, which price actually ended up doing. So where, and the question you need to be asking yourself, this goes for overall take profits and partial positions. It's not just, let me take partials or let me take profit when I hit a 1 to 5 or a 1 to 3 or take partials at a 1 to 1 or 1 to 2, because that is not going based upon what's being shown in the chart. That is going just based upon a number, and that's irrelevant to price action. What do I mean by that? If a 1 to 1 is resting, let's just say, and I'm just going to make this up, a 1 to 1 is resting right in here. That means you would be taking profit or partials right there. So in your mind, you are telling me you're taking profit in partials because you think the market has a potential of reversing from this level. Look left. Is there anything that price would come into at that exact level that would make the market go long? Absolutely not. No, there's nothing in here at that exact price point that would force the market to go long, most likely. And it's all a game of probabilities. So we have to just go based upon those probabilities. So there's no reason to take partials there. There's no reason to take partials at that 1-to-1 or 1-to-2 because there's nothing over to the left that would say the market would reverse from that region. I don't care about the numbers. I care about where is the market most likely to reverse from my position. That's what I ask myself, and that's what you should ask yourself. Not, let me take partials at 100 pips. Let me take partials at a 1-to-1 or a 1-to-2. Let me take overall profit at a 1-to-5 or 250 pips. It shouldn't be based upon those numbers. It should be based upon what direction you're trading. Are you higher time frame or lower time frame trading? If you're lower time frame trading, is there a possibility that we come higher into a higher time frame supply? In this case, no. We've already come up into our last point of supply. So we could expect an overall lower low. And in this case, since we're higher time frame bullish, we need to act as if we're trying to, where would we be looking to buy in this overall trend? I would look to buy at 138 because that is the start of our demand level on the higher time frame. It's also imbalance fill and equal lows right above it. This is that demand, 138 psychological level. So if that's where I'm looking to potentially buy, that's where I would take my profit on my sells. If, let's just say we had a demand level in here, prices trading in here, or maybe back down into here, and there's another level of supply here that price could push back up into before going short again, then I would look to take profit within this sort of mini, within the lower time frame trade. But since we've come up into extremity, we can zoom out on the higher time frame and then take partials at higher time frame levels, maximizing our risk to reward. It all depends on what higher or lower time frame you're in. So if we think that 138 is going to be reacting from, we would need to take profit from that level. So in this case, our original position's a 1-to-4.3 or 1-to-4.2, and I'm going to pull all this all the way back down into 138. I'm going to make it very pretty. In this case, this is a 1-to-11. Let's scale into this. 1-to-11, and let's get rid of some of these markups to make it more pretty. Actually, we'll leave that. So on the 15-minute where we just were, we have gotten into our entry upon a break of structure on the lower time frame. So now we start to see a reaction. Price comes back down again, and now price is starting to pull back. Okay, now where can we be looking to potentially add positions again? Well, because of the fact that we didn't make a lower low yet, and this is where we need to understand structure and stop losses. If we're looking upon a pullback, let's just say we're looking to sell. If we haven't made a lower low from our prior lower low, right? If we haven't gone like that yet, then technically this is still the range. This high has created this low. We haven't broke this low yet. So in all reality, what could potentially happen is we go like this. If we haven't made a lower low, we could go like that. We could retrace 99% of the way, make a lower low, and it would still maintain its bearish structure, as we can see. So that is why when we're trading with equal lows, or in this case, you can see right there, these are equal lows. We haven't made a lower low yet. Upon a pullback, if we're looking to get in again, then we need to put our stops not above this high, but above this high, okay? So in this case, we can scale in again, right? Because now we're on the 15-minute. Now let's scale into what's going on in the counter trend here. It's the same principles because the markets are fractal. The same principles, just if you're scaled in, scaled out, doesn't matter. So 10-minute time frame. Let's look at the counter trend here. I'm actually going to zoom in even more to the 5-minute and just see if we can find a better counter trend. So right in here, we can see that we have a high, a low, a high, a low, a high, a low, high, low, failed to make a higher high, lower low in this counter trend. So in that counter trend, this would be that supply zone. Okay, that would be the supply zone in which you could take a trade from. Stop loss would not go above this level, would not go above this level. It would go above this level because this low did not generate a lower low from this prior swing point. If it did, then yes, stops could go right above that high, but it didn't. So this is still the range right in here. So stops would go above that level. Now, this is a position that I did not take within my VIP. The first one right here and the second one right here, I did take, but not this third one. The third one's over to the right more, and I'll go over that in a minute, but let's just mark off the risk to reward anyways, and I'll go over all the numbers at the very end. So in this case, we'll just go 143.45 because that's our nearest psychological level, just our nearest round figure, right? And in this case right here, we would go 5.2. So just mark that off, 5.2, 50 pips. Right? Because that's an appropriate stop loss because it's above the high. You don't just play stop loss based upon 20 pips or 30 pips or 40 pips or whatever. It's based upon the overall market structure and where price is not supposed to go. And if it goes there, then the trade is invalid and it will shift structure, shift direction. And in this case, if price came all the way back up and made a higher high and cleared this high, we would most likely just continue long. That's why the stop goes here. Not because it's 50 pips, not because it's 10 pips or 20 pips or whatever we want. That doesn't matter. What matters is the valid regions of price. So I don't care if I had 1,000,000 pips in stop loss. What does my risk to reward look like? Because we know risk to reward makes money and not pips. So in this case, I don't give a rat's butt if I have a 50 pip stop, because I turn around and I'm like, where is my take profit? And this is where we need to look at the appropriate levels. And we already discussed that, and it was 138. So in this case, right here is a 1 to 4.23, and that meets my rules of at least a 1 to 3 risk to reward. I have to have at least a 1 to 3 in order to take a position. If I don't take it. The reason why is because if I have less than a 1 to 3 risk to reward, that requires me to win more trades because of the lower percent return I would have per trade, which requires me to have a win rate that's higher. I want to mitigate as much risk as possible. I want to make my life as easier as I can, as easiest as possible. So the higher the risk to reward I can have, the more trades that I can lose but still be profitable. If I have a 1 to 10 on every single trade, let's just say, that means I can lose 9 trades in a row, win the 10th one, and still be overall profitable. I would have a win rate of 10% but still be profitable because I would hit that 1 to 10 to make 10% but lose the prior 9 at 1% apiece, which is 9% total, still have a net profit of 1%. That's why risk to reward makes the most sense. Our pips don't matter at all. So many people would be like, 142 pip stop loss, that's absurd. Okay, I have a 1 to 4 risk to reward, good enough for me, right? In this one right here, I have a 1 to 11. 50 pip stop. Oh no, I only go for 20 pip stops. If you're going for 20 pip stops because maybe you're just ignorant, right? You would be placing it right here, right? That is not an appropriate position, okay? Even though you may have gotten lucky and it just would have missed your stop, let's just say, for instance, price went a little bit higher, had a little bit of a deeper pullback, or maybe you have a 15 pip maximum. And in that case, you set it right there, and then you get hit your stop it hits your stop loss and then continues in the overall direction. So we can't base it upon pips. We have to base it upon percent return and the appropriate stop loss. If our appropriate stop loss, in this case, I think it happens to be 52 actually. 52 pips above the high, yeah, so 52, so 1 to 10.6. If the appropriate stop loss with the appropriate take profit has a risk to reward of at least 1 to 3, you're good to go. And that's for my rules. It could be different for you, but for me, it's at least a 1 to 3, preferably a 1 to 5. So in this case, this has to go above the high. So let's make it 59 pips to make it round figure. And this can go 138 all the way back down into our higher time frame objective level. So this is 138, so 1 to 9.24. And look what happened. Beautiful reaction because we scaled into this and then we went short. So now let's scale into this position again. Okay, could we scale into here? We've made the lower low. So could we pull back into something in here? And it could be just as simple as scaling back out. Could it be somewhere like right in here? What about this last, right in there? This last overall buy to sell, maybe we scale in even further and we see that on the lower time frame, there's the last buy to sell up in there. So we could place 2 entries, one here and one here. However, look at the market movement. If we made a movement all the way down in here, do we really think that price is going to retrace like 90% of the way. On most occasions, the answer is no. In this sense, it did, right? But in most cases, it won't retrace that much. And if it does, it's probably just going to be some sort of huge sell to buy, right? Which is why this is a feasible target as well, right? Lower low, equal lows, lower high, lower low. That would be that new swing point. So let's just say that we look to take a trade from just this level only, this level right here. And that's exactly what we had on our next position, on our third position, right in here. We can see that box. That's the 1 hour time frame, that 1 hour box. Let me just go back out to the 1 hour and you can clearly see that right here. It's this box. This is what we're talking about right there, right? That's the box, our last buy to sell. So we're making lower lows and lower highs as we go, confirming and scaling in. So now let's go back to the 15-minute time frame. So we want to be placing our position short here. We just missed it, made a lower low, but again, pulled back and finally came back up into it. So I'm going to put my risk to reward tool there. Let's say 143.020. You can even go 143.000. That would make more sense actually. So let's just do that just to make it clear. 143.0, because that's a psychological level. Stops. Now, where would you place stops here? Well, many people would be like, oh, we made a lower low, so we can place it above this high. In this case, we can't. We have to place it above this high. Now you're probably thinking, oh, this guy's he's lying. He's just making it so every single trade he goes over works. I'm going to go over a rule that I follow that will prove to you why stops cannot go above here and I have to go above here for just this position. These positions, if this one made a lower low, we could put our stop here. But in this case, it didn't. It made an equal high or equal low. So we had to put stops there in the first place. But why in this case would we place our stops here for this position and not above that swing point? This is where it comes down to the ignorance of a regular trader. Many people are just looking at this from face value. This is just face value. Okay, we want to see that. Zoom out. Let's zoom out a little bit. Let's go to the hourly again. Let's look at the higher time frame structure. What happened? Oh, now you guys see it, I'm sure. Lower low, lower high, lower low. We've made that lower low. Really, the lower low is right here. But in all reality, even if we were trading in here and we pulled back up into it, the structure is high, low, failed to make a higher high, lower low. We've broken this structure. So now that we've made an overall low low, in here, we're just trading lower time frame. We haven't broken the swing point yet. But the higher time frame was finally broken. We finally closed below not only this level, but this overall low. So we can classify this as a lower low, lower high, lower low situation. So from a market fractality standpoint, if we do something like this, low, high, low, where do we expect, if we have a pullback back up into this level, just from a market structure standpoint and a stop loss standpoint, where would it go? It wouldn't go intra-trend anymore. Since we made a lower low, it would have to go back above this high because now this is the high that generated this low. So now this is the range. Just like we talked about in here, we could retrace 99% of the way, make a lower low, and still be overall bearish because this is the current structure on the higher time frame, right? So like I say, this is not a break of structure. This is not like something like this where we break structure so we pull back and go long. We have to scale out. This is our higher time frame structure now. Boom, 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 boom. Now we're going short. So our stops have to be above this swing point here. So let's make it, 103 pips. We're targeting that same level at 138. Okay, so 138, we're going to make it pretty, just make it exact. And this is a 1 to 4.85. So still meets our rules. So we're looking to take all of them back down into 138. Now it's time for the risk management. So now we have an idea of how we can scale in. Actually, you know what? I'm not even done yet. Let's scale back in again. Okay, let's even go to the 5-minute time frame. Look at what's going on in here. So you can classify this as more of an overall liquidity run. So buy side liquidity run, overall pullback. Really just coming back up, mitigating the supply. Stops are above the high, we're still good. So now if we scale in again upon a lower low, because now we've seen the reaction, a lower low has formed. So again, if we're just trading with the trend, can we scale in even further? And we just keep scaling until we see something. If we don't see anything, then we don't place a trade. If we do, then we could possibly place a trade. In this case, we do. Where's the counter trend? We have a high, we have a low, we have a high, we have a low. We had the reaction with this candle. We failed to generate a higher high in that sequence. We failed to do so, and we made the lower low. That's where we cleared structure. So now this becomes the new range. This high created this low. So if we get a pullback, we need to be pulling back into this range here. So premium price, that's just our first confluence. Where is that supply and demand flip that we learned about from last week's video? You guys already know what I'm talking about. It's right in here. Beautiful. Beautiful supply and demand flip, because we reacted off of, this is now supply. We reacted off of this demand. Should have made a higher high. Obviously, we shouldn't have, because we're still bearish. But from a market structure standpoint, you know what I mean? We should have made a higher high from a market structure standpoint, but we didn't. We rolled over and made a lower low. So this will flip from demand to supply. In this case, it never pulled back enough for us to get in. I'm just going to extend this all the way over so we can save it for later. And this is going to come in handy. So we never pulled back, and we finally hit our target at 138. Now let's go into how we're going to trade manage this. How do we properly do this? So with our first position, let's scale back out. We have to look at the higher time frame again, because it's a higher time frame trade. So we've made a low, we've made a high, we had the reaction. So for this position, I would move stops to break even once we clear structure again on the current time frame in which the trade was placed, not the lower time frames like we have in here, but the time frame in which it was placed, since it's a higher time frame supply level. This is a low, this is a high, this is a lower low. Once we clear structure, partials are taken and stops are moved to break even. Now we move it to break even, not anything before we make a lower low now. Okay. Now, in terms of partials, like I said before, this is a very crucial thing. This is going to help you extrapolate a lot more money from the market than you are, because we can't think about it in terms of a number value, a numerical value. Like, I'm going to take partials at a 1-to-1 or a 1-to-2 or a 1-to-5. Take overall profit at a 200 pips, 300 pips, whatever, because that's very subjective to the current market. It doesn't go based upon price action. We have to look at it from the opposite standpoint. If we're selling, then we go and say, okay, where could we, if we were looking for buy opportunities, where would we come into? Where is price most likely to come into in reverse? That's where we need to be setting our take profits or our partials. And we don't want to be doing them manually. We want to count how many different partial levels we have, because it's going to be different. Some levels, there's just only maybe one region in which it can reverse from. So we have two positions, our original position and then the partials position. If there's two levels, then we'll have three positions, our original, first take profit, second take profit. That's three. If we had three different areas in which we could take profit from, we have our original, which would be the overall take profit 1, 2, and 3. That's a total of 4. So you have to split up your risk. If you're using 1% per trade and you have 4 different positions, you need to have 0.25% risk per trade. Each of them will have the same entry, the same stop loss, but different take profits. You can stagger your take profits, because let's just say you're sleeping. Price comes into your first take profit, which happens to be right here. Okay. Then if you're sleeping and price hits it, then you get out, then you make money. Then you wake up, let's just say price is all the way back up here when you wake up. Now you're scared because it came into a level and it's reversing from you, so now you take partials right there. You're taking partials at a terrible price, where you could have just set it manually and have not been lazy and procrastinated and just took a couple extra minutes to place 4 different positions if you have 3 different take partials levels, and place them manually here. So you don't have to be on your phone or on the charts 24/7 waiting to take partials manually. Automate it. Make your life easier, guys. Do it more professionally, and you're going to be making more money. And if you don't want to do that, then I'm sorry, but you're not setting yourself up for success. If you guys want to be good traders, you got to do the little things right. Because again, the psychology of a trader, we go through this all the time, guys. Psychology of a trader would say, you may have not have set take partials here, or a partial level there, but you saw it react from it, and now it's pushing back up. Psychologically in your mind, because price has already had this huge sell-off, you're like, oh, I'm pumped, I'm ecstatic, I'm up a lot of money right now. Price starts to pull back. You're like, oh, I was up $1,000, now I'm up 800. Oh, 700. Now I'm only up 500. I'm up 300. I'm losing all that money. Psychologically, in the ignorant trader's mind, they would think, I'm losing all the money in which I was originally up. Now I got to take my profit off the table. I have to make something and not lose everything that I was up. So now they take profit manually right here. That tells me that they saw something to the left that said, okay, I have to take profit manually here because of something right in here. Price tells me that we're going long. There is nothing in here to say price is going long. If price were to do this on its own, let's just say you weren't even in the trade. Okay, let's say you weren't even in this trade. When price comes back up into this level, are you going to buy it? No. So why are you taking profit here? Why are you taking partials there? There's no reason. It's all about your emotions and your psychology that's affecting your decision. You need to be placing these partials and taking partials at regions in which price, by price action being shown in the chart, that it could react and go in the opposite direction from you. There is no way in hell that anything would happen in that region of price. If it does, then it was meant to go long either way. But why didn't you take partials down here instead of right there? Right? Just common sense stuff, guys. So now that we know that we need to be taking partials at certain levels, let's scale out to a higher time frame and see where those levels are. And this just comes down to practice and understanding valid supply and demand levels. So our overall take profit is that demand level here because we're still bullish. Now, because of the fact that we came into a higher time frame supply level on the higher time frames, what does that tell me? That tells me that potentially, obviously, this is just one expansion move. If this is a higher time frame supply, could we see an overall pullback? Even if it may be just back down into discounted price, maybe back down into here. What does this say? Higher high, higher low. Could be a higher high. Yes, it would break structure, but it would just be an overall pullback. Remember, this is a higher time frame trend, but this is an even higher time frame expansion, pullback, expansion move. Everything is fractal, guys. We have to think about it like that. Okay, we have to scale in and scale out. We have to be able to do multi-time frame analysis to be profitable, really. So in this case, since this is a higher time frame objective standpoint, could price roll over and make a lower low? Absolutely. It has the possibility. So the majority of my position would be off here because we're still bullish, getting back down into overall discounted price within this huge expansion pullback move. So I would say probably 75 to 80% of my position should be taken off there. 10% to 20% could be left as a runner if we do just continue down. So at least you're not leaving money on the table. You're taking money as price is continuing because you've done the due diligence to say we've come into a higher time frame level and reacted from it. We could easily see a lower low. So where would that be? Well, we just zoom out and just be like, where's the higher time frame trend? Well, it's right here. Boom, 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 boom. So if we have an overall pullback, where would that come into? Probably some sort of discount, maybe back down deeper into here. I don't know, somewhere in there. But you could also base it upon this trend. Boom, 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 boom. And maybe just following this trend, just in case we just continue to maintain our structure on this time frame's trend. So that could be an area in which you take profit for a higher high. Okay, so let's scale into that region. Well, we can clearly see in here, equal lows were snagged. Boom. All that sell side liquidity. Shoulder, head, shoulder, fake out of the neckline, enticing sellers below this level. Push up, take their stops above the right shoulder. Also, at the same time, break, retest of the neckline. That's why we have this sell candle here. They had the break and retest traders. Oh, no, right back to the upside, take their stops again. Cool. What that provides us with is that counter trend supply to demand flip. Equal lows, counter trend. I'm not going to scale in just because it's going to take too much time. Lower low, lower high, lower low, lower high. You can still see it with these pullbacks, right? Boom, boom, boom. Reaction, go long. Flip from supply to demand. That would be that level in which I would take profit overall, because that would be the level in which if price came back down into here, it would be a highly probable chance that we would continue long from there. That's where we want to be taking profit. And this happens to be at 129. 129, or you could even go 130. That would be that psychological level. That would be appropriate as well. What would that also look like, guys? This is where we need to just understand our pairs, master just a few of them. What would that be? Look at this. Shoulder, head, shoulder. It's a little skewed head and shoulders pattern. And it could be, again, just like we have in here, shoulder, head, shoulder, or this is the shoulder, shoulder, head, shoulder, fake out of the neckline, entice sellers, boom, right back to the upside. Same here. Fake out of the neckline, entice sellers, right back to the upside. Come into where we initially swept liquidity and entice sellers to begin with, continuing with the market's trend like that. Guys, it's really this easy. It just comes down to practice. It really does. If you guys aren't getting it, it's okay. Rewatch this video, continue to educate yourself. It took me about 18 months to be profitable since I had my mentor, since I started really learning this strategy. So it's okay if you don't get it immediately. But practice, you'll start to see this stuff so much easier. This morning I had a live session and I said this example. You guys, those of you who know how to ride a bike, do you think about riding a bike when you're riding it? No, you just naturally ride it. It's just easy. You don't even think about it. You're just riding it, right? But it was tough at first because you had to learn how to do it. But once you understood how to do it and you practice and gain experience with it, now it's second nature. Now it's subconsciously ingrained in your brain, so you don't even have to think about it anymore. Your autonomic nervous system or whatever automatically controls you driving or riding the bike, right? Just like your body while you're sleeping, you don't have to actively breathe. Your body automatically does it for you even when you're unconscious. It's just like riding a bike. Your body takes over and you just know how to ride it. You don't have to think about it. Same with trading. It's tough at first. You gain experience. You get the right mentor. You get the right education. People who are transparent. People who want to help you. Learn from those people. People who have good content. Don't sugarcoat anything. Learn from those people. Practice it. Gain experience. You can become very profitable. Very professional. You can do it. If you just think you can, you will. That's just the law of nature. Okay. So now, having gone over that, where are our partials levels? So we know that this is the low that created this high. So any sells in here, we need to be taking partials throughout. Where could that be? Well, where could price potentially reverse from us to go long? Well, I only see two levels here. One would be this level right here, and then our overall level here. So we would have one position and two positions for each trade. One would have this, well, each of them would have the same entry and the same stop loss. One would have the overall take profit. One would have the partials take profit. In this case, since we have two of them, you can probably take 33% off to 50% off the table there and leave the rest to ride. And if you wanted to leave a runner for an overall lower low, since we did come up into a higher time frame level that I just went over, you can also do that as well. Okay. So in this case, there's just two. Why is this one valid? Well, because let's look at the counter trend here. Okay. Lower low, lower high. Lower low, lower high, mitigate supply. Lower low, lower high, mitigate supply, fill imbalance in here. Reaction did not make a lower low. We made a higher high. So this would be that supply to demand flip that we could see. Boom, boom. That is something that could have happened. But I wasn't really expecting that just because of the fact that this level was not in discounted price. If I pull my fib from the prior low to the high that it reacted from, this is not at least below the 50%. This is at the 61.8. So it's at least below the 50% we're in discounted price to be buying. So I would still definitely take partials here for sure, but I wouldn't probably look to buy it because we're not in discounted price. So in that case, partials there, partials here, because these are the highest probable levels that price could potentially reverse from, right? So that's where we need to be setting our partials. Partials can be, it's very subjective. 25% off the table, 33% off the table, 50% off the table, whatever you guys feel comfortable with. I really don't have an objective answer for you. It's just whatever you guys like. So that's how I would manage this trade. Now let's go into these ones. How we manage these trades are pretty much relatively the same, but since these are lower time frame trades, we have to understand that we should probably have some sort of relatively lower time frame take profit. But we can still have our higher time frame take profit, but just taking some more partials at the lower time frame levels. So where would that be? Well, first and foremost, I'd probably take my partials here from this level. Probably at least when we get back down to a prior low, or maybe the higher time frame swing point low. So either right here or right here, just taking some profit off the table when we make a lower low, because you want to be taking profit at these discounted prices when you're selling. When you're buying, you want to be taking profit up here. Just in case it goes in the opposite direction, you've been taking profit at the best price. Just in case we pull back and go long, you're taking profit at a really good price, right? So that's what we need to be looking for. So in this case, these two positions probably take profit, when we clear, either this low here or just these two lows. Well, actually, excuse me, these two lows, because this is a structure, high, low, high. We finally broke it, but it actually broke this one as well. So the higher time frame swing, lower low, lower high, lower low, taking profit there. That would be the first take profit. Obviously, the second would be that area in which we could reverse higher time frame, which is right here. That would be our second take profit. And look what happened. We had a massive reaction from it. We had a massive reaction. Obviously, it continued short, but it could have easily reacted from that and gone long. But at least we're taking partials down in here at discounted price, the best possible price before it could potentially reverse. So in this case, we took more partials there, and then our rest of the position could have gone off at 138. Same thing with this one. In this case, we got in right there. And when you take partials, when structure has been broken, meaning for this position right here, when we break this low, because that's our swing point, lower low, lower high, we got in this position. When we break in and make a lower low, stops to break even. On these lower positions, right in here, we finally made the lower low, stops to break even on this position here. Excuse me, on this position, it was the re-entry. That was already put at break even there when we made the lower low. When we made the lower low here, stops to break even now. Obviously, when we came back up, we hit stops to break even, but we took partials because we took partials below this low. Because when we take a low in an enduring downtrend, especially when it's a higher time frame low compared to these lower time frame trends, what do we naturally expect when we make an overall lower low, an overall pullback? So that could potentially hit us out break even upon that overall pullback, even though it's still overall bearish. But we still have to be prepared to do that. And we can't just leave stop above that high, because what if price actually reverse trend? Because when we take liquidity, we oftentimes have a reaction. Usually we would stay with the trend. That's correct. But we just need to be smart and just take the money where we can. You can never go broke taking profit. Okay. So in this case, this one would have been fine. This one right in here would have been, this one and this one would have been partial. So a lot would have been taken off the table and then stops to break even, and it would have come up and hit it. But this one right here, we hit an entry 143, stops above the high. And once we make a lower low compared to this low, because the overall structure now is low, high, low, high, low. Once we clear this low, now we can move stops to break even and take partials off the table. So stops are at break even here, partials have been taken off, and now we're holding to our overall 138. So that's how we can manage our positions. That is how we can move stop to break even and not do it too quickly, to not focus on all of the noise. Because think about it, since we didn't break structure right here, if we entered right there and we immediately moved stop to break even, we would have gotten hit out break even there, which was unnecessary because we never made a lower low. That is how we can determine the difference between when to move stop to break even and when not to. And also when to take partials and when not to. Where to take partials and where not to. Everything comes together. We have to be putting this all together and managing it like a professional. If we treat it like a business, if we treat it like a career, if we treat it like a professional would, you are going to see tremendous results than you already are seeing now. Okay? So now, remember we talked about this before. We came into that 5-minute supply to demand flip. Demand to supply flip in this case. So what do I always say when price comes into a level of objective and we react from it and then comes back up into an original level? Like, we haven't come into objective here, right? Which is why upon a pullback, I was still looking to sell. If we already came into objective, I wouldn't be looking to sell upon a pullback into that level, because why? The objective was already met. We already hit 138. In which you could have probably bought it from there if you wanted to hedge. Now, hedging you can do when the higher and lower time frames are not in conjunction with one another. Higher time frame, could we be bearish? Sure, we could have the reaction and be bearish, but counter trend, we're still bullish, so it's not in conjunction. You could have easily bought it right there as well, 138. Okay, but I'm only going to add up the positions for in here. Okay, so now, before we get into this position here, I'm just going to calculate all the profit that you could have made realistically, okay? And the profit that we did make throughout here. But I'm only going to calculate the ones that we had in our VIP community and not the additional one that we had here in the lower time frame that you could have actually placed as well. I'm not going to count that one. So I'm just going to count 1, 2, and then the third one here. So in this case, we made the full amount, right? So 4.2% return. We'll write that down, 4.2%. Okay. Now this position and this position. So really this position that we talked about, we took 50% of our position. Well, actually, excuse me, 33%. I took 33% personally. So I took 33% off the table when we hit this level here. We came back up, hit break even. So I'm actually, you know what? I'm not even going to count this as a win. I'm just going to say 0% return. Even though I made a little bit, it's not going to be worth me actually figuring out how much exactly I made. So we're just going to say 0. But then this one right here, we hit our full target. This is a 1 to 4.85. So 4.85 plus 4.2, let's just say 4 plus 4 is 8 plus 0.85, 0.2. That's 9%. Let's just say 9% total. If you risked 1%, if you risked 0.5% for each of them, then you would have made 4.5 because that's half of 9. Still, guys, 9% or 4.5. Let's just say 5%. That just rounds up to an even number. 5%. Just taking these couple of trades, doing your due diligence, doing the little things correctly, right? 5% in 1 month. I know you take partials throughout. I know we take partials here and take partials in here for these positions. So obviously the full amount of the risk is not being assumed because you're taking partials here, meaning after you take partials, you have less of a lot size when you overall hit your take profit for you to make money. I get that. So let's just say 4.5% if you risk 0.5% on each. Let's just say a total of 3%. Net 3% at the end of the day. And you've risked 0.5% here because what you wanted to do was get in 0.5%, wait for confirmation to add the rest. So guys, I'm giving you numbers that are based upon the most conservative thing you could possibly do in trading this. I'm not over leveraging, and I'm not even saying 1% return or 1% risk. I'm saying a 0.5% risk here. 0.5%, and I'm including the partials that I've been taking. So net accumulative profit upon all of these positions, if you did it the most conservatively possible, you should probably at least net 3%. Obviously, if you had 1%, you'd probably net 6% in total, maybe a little more. And, if you didn't take partials or, whatever, and you got lucky, you probably would have made over 10% return just on these trades. But let's just say the most conservative ever, 3%, giving you the worst number possible. 3%. Let's just say you took that and you did that each and every month. Those were all the trades that you took for that month. You took the rest of the month off and you chilled. You didn't overtrade, you didn't over leverage, you didn't look for anything else because you did your due diligence with these trades. You did it professionally and you're done for the month. 3% times 12 months is 36% per year. Compounded over 10 years, millions of dollars, ladies and gentlemen. Millions. Compound interest is huge, which is why people think, oh, I need 10, 20, 30% a month to be profitable, to be consistent, because they're looking at it from their measly little $100 account. So when you're looking at it from your small little account, then of course you're going to need a big return to make a lot of money. But in order to do so, you have to put on a lot more risk in order to hit that return. And then over leveraging and putting on more risk leads to a high probable chance of blowing your account. It's just not sustainable, guys. So please do, guys, if you haven't already done so, check out that psychology webinar that I recorded that we had last Saturday. And if you guys are interested in purchasing that course, I will still extend the 20% off promo to you. I know it's over, but I think psychology is so important. If you guys are interested, head over to my website, ArielFxTrading.com, and take advantage of that 20% off. We have the code there for you. And if you can't find it, message me. I can provide that for you. Psychology is huge. It's 80% of your success. 20% comes down to your trading strategy and how you manage the trades, just like we're going over now. 80% comes down to psychology. Every little thing that you do, any little decision, is actually a psychological decision. For instance, very quickly, before I get into the rest of the video, you may be looking just like in here. You may say, oh, I'm going to wait for price to react from this level. Okay, I'm not going to enter my position because I want to wait for confirmation. I'm a conservative trader, whatever. So you see the reaction. Great. You're like, okay, I'm going to wait for confirmation before getting in. Let's say there was no confirmation. Let's just say price came into it and just started to just go like that. And there's no confirmation. In a trader's mind, they would think, I got the bias right. I got the entry right to a T, but I'm not in the trade. Psychologically, that will infuriate them. And you know what that would cause them? 100% of the time, I guarantee you it's going to cause this. FOMO every single time. FOMO. So then now they get in down here. Price is now dying. They get in here, and now, you know, they don't even know where to place stop, because obviously there's no point of placing stop anywhere besides probably up here at that point. At this point when price is down here, which by the time from here to our realistic target, maybe you'd hit a 1-to-1. Terrible risk to reward. But anyways, maybe they're so pissed off that they hold the trade, and then price comes and finally reverses from them. Now they're losing because they had FOMO. Even though they thought that they lost a trade because of the technicals behind the trade, maybe like when they got in, they're like, oh, price just reversed. Oh, I just lost a trade because I didn't get the overall direction right. No, you got the direction right. You wanted to short off, it shorted off. You got the area of interest rate. You got it right, but you had FOMO, but you didn't even know you had FOMO, and you're blaming it on the technical analysis when in all reality, it comes down to your psychology. Every decision you make is based upon psychology. It really is. And if you can't manage your emotions, doesn't matter how good of a trader you are, you're never going to be profitable. That I can guarantee you. It is facts. 100% facts. So that is why psychology is so important, which is why it's a part of my all-inclusive mentorship program. However, I'm willing to sell it individually because it's so important. But I'm also willing to give you a discount on it because I think, you know, you would really truly value from it. So if it's something you're interested in, I'd be happy to talk to you about it and how we can, you know, best get you set up with it. It's really not that expensive, guys. I really don't charge much for my stuff. I want you guys to learn, and I don't want financial issues to be the reason you can't learn. So I'm willing to work with you on price too. But anyways, continuing with what we have here. We've taken profit at 138, and now let's continue to play this out. So as we continue to play this out, we can see that we had that 5-minute time frame level, right? That area of supply. Now, many people would be like, oh, I'm going to short from that level. Well, if you didn't know that this was a level of demand that we came into and had a beautiful reaction, failed to make a lower low and made a higher high, you would sell this, and if it comes back to the upside, you would lose and wonder why. Because we've already hit the objective, which is why another thing I say is objective is so important. You have to understand where the objective is. So knowing this is the objective, now we know not to sell here. Now here's another rule. Now this is where it gets a little tricky, and you're like, Nate, you're throwing so much at me, you got to calm down, you got to relax. I know I am, but you guys have this video, you can replay it. I hope you're taking notes, writing down these rules that I'm giving you. When I say rule, I mean objective, meaning you can use this every single time. Every time. There's no subjection to it, no subjective reasoning. When I say a rule, it's objective. You do it every time. So that's something you can write down and keep. So this is a rule. Let's zoom back out. Because of the fact that we came into a higher time frame objective here, you could assume, and there could be a probability that we could make a lower low, right? We already talked about that. Even though we're still bullish lower time frame, in which we are reacting here, and it ended up going along and making a higher high. But I'm going to try to make a point here because it's still valid, this point. Because of the fact that we made this high here and we came up into objective, we had the possibility of rolling over. Meaning, even though we came into lower time frame objective here and we reacted from it and broke structure, doesn't necessarily mean we're done with this overall trend to the downside. Because of the fact we came into that objective. So could we react here and go short? Yes, in this case, there is a possibility. Now, let's just say the objective was up here. And there is another objective now that we're trading in and around this level, which is why I have these markups. I'm just on bar replay right now. But our new objective is 150. So let's say we're looking to target 150, and there was no objective here. This, we didn't come up into anything. It was just nothing. Well, then you would look to buy here, obviously. Well, you could still sell in here for sure because we had the confluence to do so, in which we just went over. Obviously, your take profits would have been down here, and you wouldn't have to have a runner because there's no point of going short. There's no probability that we would go short. There wouldn't be any probability because we're still bullish and we haven't hit objective yet. So you would assume we're going to make a higher high into 150, right? I'm just saying if there was no objective in the first place, right? So in that case, then everything that you were looking to sell in here, once we hit this objective, then you wouldn't look to sell anymore. You would look to just continue to buy. But because of the fact that this is an objective and we had a reaction from it, we could possibly do this. We could make a low. We could fail to make a higher high and make a lower low and start this overall pullback, right? because we could have an overall expansion into supply and then have an overall pullback before maybe another expansion higher time frame, even though this is lower time frame trend. Okay, so hopefully you guys get what I mean. So because of that reason, just by itself, you could look to potentially sell it from that level. Now, this is the case in which I would not place a limit order. Many people ask me, well, when do you place limit orders? When do you wait for confirmations? This is really the only time I would have to wait for confirmation, right? That is because we have come down into objective and we have broken the counter trend structure to the upside. So it's not a real good probability that will come into here, but there is because we came into an objective higher time frame here. So there is a possibility we keep with this trend to the downside. But because it doesn't follow the current trend, I won't be placing just a limit order. Now, if we did, well, let's just say that we were higher time frame bearish, we're making lower lows, lower highs, and going like this, and we had an overall pullback, and this was our last point of supply, whatever, then yeah, I would easily set a limit order here and then wait for confirmation to add more to the downside. But because we're bullish still, and we've come into objective, and we had a sharp push into it, sharp reaction from it, and then we failed to make a lower low, and we made a higher high, I wouldn't place a limit order there. That I would wait for confirmation in and of itself, right? So we've come up into this level. Now let's scale in. Let's go down to like the 15 minute. And we can see here that we waited. We were patient, reaction from it. Chop, 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 chop. Pushed up, failed to make a higher high, lower low. So you could have sold it here. Boom. That's a supply level. That's a clear supply level. Reaction from the level, failed to make a higher high, lower low. So you could have sold it there. And in this case, you would have lost. You would have. And it's unfortunate, but you would have lost a trade. But that's okay. Now that we know that we've broken back above it, we're making higher highs and higher lows now, we can safely assume that the trend to the upside is probably going to continue. So we have multiple buy levels, in which we actually had when we were in this region of price. We had our demand here that failed to come into this last demand here. This is the demand that swept all of this liquidity. Sell to buy that failed to generate a lower low from this prior low in the downtrend. That's where we stopped. Higher low, higher high. That's why we have these two levels. And we still have those today. We still have that possibility of these. These are still valid even today. But let's just say, we lost the sell. Now we can confirm that we're actually still bullish now. And, we tried to sell it off just in case we actually did react and go short. And that could have been a possibility, right? But now you would have lost a trade. Oh, well, higher high was formed. Okay, cool. Let's turn around and continue to look for buys. So we have one here, but we're still making higher highs, higher lows, lower time frame. So this one could have easily been another trade for you. For buys, what do we have here? Equal lows. Perfectly equal lows. These lows did not take out that low, so these are equal lows. If it did take out that low, it would have been a liquidity run. We haven't done that yet. These are equal lows. So let's continue to play it out. Let's see how it does. So now we have made a higher high, and now that we even now know that we're bullish again because we have broken the supply and we've broken this prior high. So now we can 100% confirm that we're bullish again. We are going to make a higher high now. That we can confirm because we've broken the counter trend here. So these are still valid levels. I'm going to extend this over. We have this level, and this level. Well, you might ask, okay, well, if you made a higher high and a higher low and a higher high, I would get why you would want to pull back in here. But if we fail to do so and make another higher high, wouldn't this be invalid and we would like to buy off of this demand now? Yes and no. Yes, you could. That's what I would look for. However, we have equal lows. That's the only reason why this is still valid, in my opinion, is because we have equal lows. So like I said before, we could go like this, come back down, and go like that. It would just be a liquidity run into demand that hasn't been mitigated yet for a higher high, even though we've already created a higher high here. So let's zoom back out and let's continue to play it. See what would have happened. We gotta just be patient and wait. We've made the higher high, and it should come all the way back down eventually. If you had taken a position in this demand level, you could have. So let's just do that. Just like I said before, you could have definitely, this is a demand, even though we have equal lows, you could still look to buy it from that level. And in this case, from that high, you would have had a beautiful reaction. Where would you have taken partials if you bought it here? right, so let's continue to practice what we preach here. Stop would go below the low, right? That was the low that created that high. So 111 pips. Overall target, let's just go overall targets first. It would be a higher time frame, higher high. However, we haven't had an overall pullback yet. We're still in this current trend. So could we go like this and have an overall pullback before continuing long? Yes. Would that hit our stop? Yes. So what we have to do is adjust our take profit. We can still have an overall take profit at 150, but where we place our partials, this is where it gets important. So when we pull back into here, we swept liquidity just by a few pips. Buy to sell made a lower low. So what if price goes like that? Is there a possibility that price goes like that? Possibly. So first take profit would be right in this supply zone. Take profit 1 would be here. Take profit 2 would probably just be at this high or maybe a little bit higher, maybe up into 145 psychological level, just in case, or actually it probably would just be above this high, because once we make a higher high, you could expect a higher low. In that case, it would possibly could break counter trend structure, have an overall pullback, still maintain its bullish structure, higher time frame, and then continue. So that's where I would have my take profits, my partials. So 1 would be right at that lower time frame supply, just in case we fell and actually came back down into that demand first, in which I would have bought it again. But second, profit above this high, 145.65 or 145.6 psychological level, because at that point we could potentially break this counter trend and have an overall pullback, still maintaining bullish structure. But then overall higher time frame 150 would be that overall objective for me, giving me a total of a 1 to 6.8 risk to reward. Fits my rules, right? Okay, so let's see how it plays out. In that case, oops, the supply starts here. Boom, take partials right there at that level. Let's see, take partials at, let's go 3.8 psychological level. I'm just rounding it off to whole numbers. That would be good. Price comes back down, and then we would have hit our stop. Well, it would have hit our stop, right? Because I know what happens. There it is. So now we hit our stop loss. Would we have put stop to break even? No. Why? Because we didn't make a higher high from our swing point yet. So we would have taken partials, because that's a region in which price could potentially reverse from us, but we wouldn't have put stop to break even because we needed to have it let it breathe a little bit. If we made a higher high and we broke the trend, then yes, stops to break even, because if we came back down, we would probably just continue short. Hopefully you guys get what I mean. So in this case, we would have lost the trade, but we would have not have lost as much, and we would have made a little money. So it may have wouldn't say broke even, we may have just lost a tiny bit, but it happens sometimes, right? We lose on occasion. We didn't take this trade. I'm just showing you what you could have done. So now we get rid of all this stuff. And now we come back down into our original level. We set our buy limit, and you could do the same thing. 0.5% risk here, wait for confirmation. If you didn't want to, then you can just place your full risk. Well, let's just say half risk, wait for confirmation. This is 150 higher time frame. 1 to 16 risk to reward. Let's play it out. Okay, now, what do I say in the course? I say if we react from a level and come back up, either break counter trend structure or make equal highs, it should still be good for confirmation. So where would we place our additional position? Right here at that repricing event, that demand. And in this case, I think we would have lost that trade. Yep, we would have lost there. Oops. Nope, sorry. It would have been below this low, the wick, but it still would have come down. Yep, right there. Still maintained our structure. Let's play this out a little bit. Boom, boom. Okay. Let's keep going. There we go. Good. Perfect. Right there. So now, on the course, we say a higher high or equal highs. In this case, you just so happen to lose, and that's okay. It happens to lose sometimes. It just needed to come down a little bit further. It just came down deeper into it. We still maintained our structure. Stops below the low, right? We still didn't hit it. Where's our counter trend? Low, high, equal lows or equal highs again, but there's really nothing to take advantage of. If you did, you would have made money because we would have put stop there, but it didn't come there, so you would have made money there. But if you didn't, which I wouldn't have found anything, we would have just seen, and we've been patient, failed to make a lower low. We did not make a lower low in comparison to that low. We made a higher high. We cleared structure. So now we're counter trend bullish again. So where do we place our trade? And we can see it just needed a little bit more higher time frame accumulation. That's why we can't be so so crazy to, when we see an initial reaction, immediately look for confirmation on the lower time frames and buy it. Because sometimes this is the confirmation. It just needs to play out. It just needs to let the price play out a little bit to form something like this. This is just accumulation, and now this is the confirmation. This is the real confirmation. I mean, you could have classified that as real confirmation. Just would have happened to not have played out. But then you would have been patient and waited, and you would have seen this confirmation. You would have been like, okay, now the trend has finally been broken. We've accumulated into a level of interest here. Let's take a look at the VFI to see if we can get any more of a possible confluence. And in this case, we do. Look at this. Price is still falling. But what happens to volume? It's rising now. So when the banks offload their positions, for every buyer, there has to be a seller. So once they're going back into their buys, they need someone to sell it to. So that means that's why price continues to fall when they're looking to buy. But volume, they're starting to get out of their buys into out of their sells into their buys. That's why the volume starts to increase. That divergence creates that good confluence for a potential reversal. Keyword potential doesn't mean it's going to happen, but it's a good confluence to have. So what do we see? We see the break of structure make a higher high. So this is the low that generates this high. We want to see a pullback. And I think it happened to be like on the 20 minute, maybe the higher time frame, 30 minute. I don't remember what it was. I saw it yesterday, guys. But anyways, this would have been your demand level. You would have placed your trade there. Boom, stop loss here. Because we could still pull back into it, right? So you could have gone there, or you could have gone at that demand right there, that doji candle. But let's just be conservative, right? Let's just be conservative and go right here, right? The open of this demand, fill the imbalance. Stops below this low here. So we have, we're going to say 77 pips. Overall take profit. Where do we place partials? Oh, wait, we're still counter trend bearish here. Boom, 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 boom. Where do we place partials? Right here. First partials would be taken there. Second partials would be taken probably up here above that high or above this high. Third take partials would be 150. Overall would be about a 1 to 10.7. With partials taken, you probably could expect around maybe 5-6% in total. Still a really good trade, guys. But this is how we go about managing it. Let's just play it out. I know it's kind of messed up. I have a lot of markups, but that's what would have happened, right? So we got in, and this is just what happened. We came up in, and look what happened. We came up into this level here, and we had a little bit of a reaction. Partials have been taken. Oh well, we continue to go. Higher high has been formed. Stops to break even. We're good to go. We're good to continue to rise. And now this is just in current price, kind of somewhere over there. All right. So hopefully you guys understood, and I'm just going to kind of clear this up a little bit. I'm going to get out of this bar replay here. I hope you understood everything that I've been going over here, and everything that was shown. These are the exact same trades we took. These are the exact trades we took in our VIP channel. So I'm trying to be as transparent as possible going over these examples, because I know you guys are probably sick and tired of going on YouTube and looking at all these videos that other people post, and they're all just hindsight examples. I'm showing you a hindsight example that happened in the past, but that we actually took in real time within our VIP, as proven here with these screenshots. Okay. So hopefully you guys will understand how we can possibly, potentially scale into positions. Not all the time will there be areas to scale into, but if we do find it, we can provide great risk to rewards. And if we manage our trades correctly, we can really make as much money as possible from the market. First and foremost, have to understand higher and lower time frame structure, higher and lower time frame supply demand levels, higher and lower time frame institutional concepts, like sell to buy to sell, imbalances, higher and lower time frame. But then when we come into these levels, we can look for scaling and opportunities, being patient, placing proper stop losses, proper entries, proper overall take profits, and proper partial profits, right? The dripping tap fills the bucket. Taking profit is still good. It will eventually fill the bucket over time. Little profits here and there will fill the bucket. You can't go broke taking a profit, guys. All right, so to wrap everything up, guys, before I get into the little, I wouldn't know if you call it a contest, just meaning a little practice problem for you, practice example. I want to first say that, guys, if you fully understand what I just taught, if you fully understand it, even though it's just one component of my strategy, just scaling in and trade management, just one component, we have a lot of others to go over. But if you understand this and you can apply it and practice it holistically with a holistic perspective, I would recommend trying a prop firm challenge. We'll probably have another one of these ArielFx prop firm challenge giveaways here in the upcoming months. So, stay tuned for that. If you are already profitable, then congratulations, keep practicing, because you always want to be a student of the game. Never want to not be. Potentially take some prop firms. If you know that you're not profitable, if you are losing trades, if you're confused, if you are a break-even trader and want further assistance, I recommend not taking not taking prop firm challenges. I would recommend focusing on your education. Okay. And if what you see here, if you like it and want to learn more about it and learn the proper way of dissecting the markets and looking at valid regions and actual facts of how you can go about trading step by step, full A to Z guide, hop over to my website, ArielFxTrading.com. Just book a free call with me. You get a free call with me or one of my co-founders to see if you are the right fit for our group and to see if we are the right fit for you as well. If you're not the right fit, we'll happily provide you with our beginner's course, our proprietary trading plan, and advice you can take going forward to escalate your trading. But if it is the right fit, we would love to extend the invitation for you to join, and then you can get the help that you need. You will be receiving all of our course material going over every single facet. And this is just one component, guys. Every single component, more in-depth, because this is more of just, I wouldn't say surface level. It's relatively in-depth, but the courses go way more in-depth. But it's easy to understand as well. It gives you more information. It's a simplified version. This is all simplified because they're complex concepts, but we try to simplify it. Simplified version, step by step, going over everything you need to know from smart money to supply and demand to Wyckoff to psychology, every component of trading that I was taught by an institutional trader of over 20 years. So I'm trying to relay that information onto you within the courses. So very valuable. You also get lifetime access into my VIP group where we send trade ideas, analysis, breakdown videos, everything that can get you guys help. We do one-on-one sessions for our members. So if you need individualized mentorship, you get that with me personally. I will be doing those with you to ensure that you get the right help and answer the questions that you have and divulge deeper into the concepts to really help you escalate your learning. Also, we do provide live trading sessions for all of our VIP members, so you can trade live with us, seeing exactly what we're looking at every single day. All right, guys, so if that's something you're interested in, head over to my website, ArielFxTrading.com, book a free call. Would love to speak with you regarding your goals to see how we can best help you going forward. But if you guys like this video, give it a thumbs up, like, comment, subscribe, and stay tuned for next week's video. It's going to be awesome. We're going to finish off the month with the 4 series video with next week's video, and then possibly hop back over to our live sessions like we were doing before, because I know a lot of you guys did enjoy that. So before I wrap it up, guys, let me go over the contest or the little practice that you can do. So what I want you to do is I want you guys to head over, or I'm going to show you this. I want you guys to head over to Aussie dollar, US dollar. And I want you to focus on right in here. This is November 2nd. So this is actually today. And if you zoom out to the 1 hour, 2 hour, 3 hour, 4 hour, I just happen to be on the 2 hour because it just shows me a clear picture. Look at this chart, AUD USD, current day. This is November 2nd. Zoom out to like the 2 hour time frame so you can see this. What I want you to do is focus on this area right in here. And I want you to break down a top-down analysis for me. Do a top-down analysis. Now I want you to do it in the form of a video. It doesn't have to be long. Could be a 5 to 10 minute long video going over a top-down analysis of AUD USD, understanding, marking off your higher and lower time frame supply zones, looking where you're looking to enter higher time frame. So I'm just going to help you out with a good start. This is a lower low, lower high, lower low. So we should be looking to pull back lower high for another lower low. So that's our higher time frame supply. So I want you guys to scale in and look for additional levels in which you can mark off. I want you guys to put in your higher, lower time frame supply demand levels, scale into those current trades, provide me with any additional scaled in trades that there is, possibility for. There's probably some scaled in trades in here. So just do your due diligence, go over, make a video for me, mark it all off, talk about it very clearly, and mark off any hedging opportunities mark off any scaled in trades, and then show me how you would go about trade managing them correctly. And if you guys send it over to me, I will review it. If it is correct, if it's exactly what we're looking for, or just, relatively close to what we're looking for, you guys will win a reward of 30% off of our entire exclusive mentorship program, because we want to give you guys the opportunity to get in at a discounted price. We don't want you to have you pay full price for something that you really want to learn. However, we're not just going to do giveaways and handouts like that. We want to give you the opportunity to invest in your education. But if you can prove to me that you understand the material through this video and you can apply it through what I've just told you here with this pair, I will be happy to give you a 30% off of our mentorship program. So send that over to me via Telegram or Discord in a video format. It could be 5-10 minutes long, just not a long time. But the reason why I ask this is because those of you who do participate, I will see that you guys are definitely willing to learn, and you guys have soaked in the information, and you guys want to learn this and escalate your trading. And that will show me that you are worthy of a 30% off discount, and we'd be happy to get you set up. So thanks, guys. I appreciate your time today. Hopefully you learned a lot. If you have any questions, let me know. I'll be happy to help you in any capacity that I can. Until next week, have a great rest of your week, and we'll talk to you all later. Thanks so much.